Meantime, a big move for your 401k plan, the Labor Department approving private equity as an investment option for the first time. The move gives the industry access to more than $6 trillion. For more on this, let's bring in Sharon Epperson, who's looking at what it means for retirement savings, and Mike Santoli, who's looking at why this is happening now. Welcome to you both. Mike, let's start with you.
Well, the primary reason, Kelly, why it's happening now, it seems as if the private equity industry has been looking for this change to happen, pressing for it. They would like a new distribution channel. Right now, pension funds and very wealthy individuals have very heavy allocations and have for years in private equity. And the smaller retail investor, long-term retirement saver, is not a market that they had access to. So clearly, it's a growth area. Now, the question being, is it something that individual investors have been craving, asking for? Arguably, yes. I mean, private equity has become more mainstream for a few reasons. You saw Vanguard actually partner up and try to get into this business just a couple of months ago. Part of it is because all these companies that now have stayed private. So private equity is a larger share of the corporate value that's out there in the world and, of course, outside the public market. So those are the main reasons I would say it happening. Now, as to whether it's a great time to kind of grab for private equity returns, that's not really clear. They've had great record over the very long term, but there's so much capital now devoted to it. It's unclear if future returns will match those.
What, roughly speaking, Mike, are the returns for private equity? Because this is generally a high fee kind of product as well. I'm also curious. I mean, there's so many different, each fund is different. It's like saying you can have access to the bond market. OK, well, which CUSIP?
Exactly right. I mean, these funds typically raise their money all at once up front in a given vintage year, and then they invest it and harvest those gains down the road. I'm not sure how it's going to work with 401k plans, but the returns have been quite good as they are reported, but there aren't any public reporting standards. So they've been better than public equities as reported, but also they're skewed to the long ago historical period when private equity returns seemed as if they were elevated because it was a relatively immature part of the market.
It does seem like they would need better public reporting standards if this is now going to be widely available. Interesting. Mike, thanks so much. Mike Santoli. So, Sharon, we turn to you, looking at how this could change retirement funds and the way that people invest their money.
Well, it's important to know, Kelly, that the Department of Labor has said that this can be used, private equity investments can be used as an option in target date funds, in target risk funds, and in balance funds within a 401k. This is not a statement that you can use private equity as a standalone investment option. And while the exposure to the private equity markets could further diversify your portfolio, financial advisors and consumer advocates say it's really important to carefully consider the risks. There is a lack of transparency here. Information on private equity funds that invest in private companies is not as readily available as mutual funds that are investing in public companies. And therefore, it can be difficult to consistently pick the winners. Also, keep in mind that target date funds are often a default option for many workers and some less sophisticated investors. So consumer advocates are concerned that including a private equity option in a 401k is providing an option to workers who can least afford to take that kind of risk, Kelly.
That's absolutely right. I mean, I'm not even sure I know what's in my target dated fund. Very few people are going to go through. I mean, if you ever wanted to a bonanza, you'd say, yeah, just stick it in the target dated fund. I mean, and I don't even know if you can opt out. I remember I looked at mine once and it was in international equities. I didn't want that exposure, but I don't think I could do anything about it. So it would make a lot more sense to me to have people proactively decide they want to put their money in there as opposed to, would I even know if it was in my target dated fund unless I really went through all the trouble of checking?
Yeah, you raise a really good point. And I just got off the phone with Fidelity, which is the largest 401k provider out there. And they said that, look, this may possibly be an option that would be appealing to the mass affluent investors and sophisticated investors. But the fact that they're saying now that it has to be in a target date or a balance fund, these are generally not the most sophisticated investors who are going to opt for these in their 401k. So you're kind of offering it to the people who are less likely to understand it and let alone be able to use it effectively for their long-term goals. The key here is that investors need to make sure that whatever they're investing in their 401k is something that's really going to help them achieve their goals to be able to retire, to be able to work differently down the road. And what this is doing is not something that's transparent for the investor.
Right.
It's actually something that now the employer has to decide on, and taking that extra step, making sure that the employer has the fiduciary responsibility to really investigate that this is a private equity option that is lower risk, that is cost effective. Those are two words that don't usually go with private equity.